Hello everyone, welcome to today's session. Made a couple trades today, one in my real money account and a couple in my paper trade account. I took Roku calls this morning. I'll show you what I bought, where I bought them at. I bought them at 10:12 this morning, and I'll show you why. Let's go to Roku. Made about 12%, something like that. So I bought them at, you see down here we had a pivot point, and then right here we had a bullish engulfing candle right off that pivot point. I bought them right at the beginning of this candle. I was actually just, I was pretty much a candle too late buying them. I should have bought them right here, but I didn't. I was looking at other charts and didn't see it right away. But my entry ideally would have been right here, and let's pull that up. What were those? That was the this Friday's $90 calls. So let's see, this Friday's 90s. See, they're trading at 320 now. I think I sold them at 193. So okay, here's, yeah, this Friday's Roku's. Is that what the one that traded? Okay, I paid 263, sold them for 293. All right, so I paid 263. I bought them at 1012. I sold them at 1022. 1012. We were over here. I got that set on 1 minute for some reason. All right, at 1012, I bought them at 263. If I would have bought them at the candle, I should have. I could have got them for 255. Not a huge difference, but it's still $8 per contract. I paid 263. They pulled back slightly. At one point they were at 251, and then it took off from there. I sold them at 1022. I only had one contract, otherwise I would have held them a little bit longer, but I sold them right after the open of this candle. They actually went up to 386. Yeah, I wish I would have kept them longer, but oh well. If I knew how high they'd go, I'd have a lot bigger account than I do. So bought them at 1012 right here. Sold them at 1022 right after the open of this candle, and the reason I sold them was we had a lot of congestion right here. We had VWAP, we had the 100, 3-minute 100, and we had oh, that's VWAP there. So we had the 20 SMA, the 100 SMA, VWAP, and what's the purple one here? The 50 SMA and the reverse engineering RSI. We had them all coming right here in this little cluster. That was a lot to fight through, and I didn't want to take a chance on it turning around and coming back down. Naturally, as I always say, if I had more contracts, I would have held on to one, or at least held on to a couple. I would have sold at least half right here. Held on to maybe a third of them, at least one, to see if we could have broke through this. Probably would have sold another one right here, because one, we had a pivot point, two, we had a previous high rate. Not necessarily a previous high, but it's the top of a candle. This would be a previous high. This would be a previous high. This isn't considered a previous high because it's not a high, because we're higher than that right here. But it's still the top of a candle where it meets a pivot point. Just to play conservatively, I wouldn't do an entry based on a high of a candle that's not a previous high. But as far as exit goes, sure. And you can see that kind of held, maybe because there was a pivot point there, but it held here and here. There's resistance here, support here. It actually acted as support and resistance the whole day. probably more because of the pivot point than it was because of this candle, but nonetheless, I would have sold probably all but one contracted here if I would have had, say, 4 contracts. I would have definitely sold 2 here. Definitely sold 2 and probably put my stop at break even. Once we broke through this, I probably would have sold 1 more right here, moved my stop to probably right just below this, right about in this level, right below this support. You see this line right below this support also coincides with the bottom of this candle. So I probably would have put my stop somewhere in here. Sold the 3rd one here and held the last one to see where we go. Once we would have got up here, I probably would have sold it after this bearish engulfing candle. Probably would have sold that last one there. I may have set a stop for a close below the cloud, which would have been this candle here. It would have sold, but either way, it would have been a good trade. But in the end, what was it, 30 cents off a 263 entry? Made 11.4%. I'm not going to complain about that. It's not a lot dollar-wise, but it's not about the dollars. It's about the percentage. If you can make 10%, if you can average 6% on a trade, that's taking, maybe you have a 12% winner and and stop out for break even, and you're averaging 6%. If you can average 6%, you're gonna, you just slowly step up 1 contract, then 2, then 3, then 4. Next thing you know, you start growing your account. You're trading $1,000 and you make 6%. You just make $60 on a trade. So you do that, a couple times a day, you're going to build your account pretty quick. It's not about the dollar amount; it's about the percentage. I've seen guys, and it's not their fault, but I've seen guys post in chat rooms, I just made $1,000 on a trade in 3 minutes. Well, how many contracts did you buy? Well, I bought 50. So you made 3%. I can make 3% on almost every trade. Just about every trade you enter, there's a possibility of getting 3% if that's all you're trying to shoot for. But the guy that goes out and makes $50, but he got 15%, I'm more impressed with that than I am the guy that made $1,000 and only got 3%. So that's kind of, and that's something I'm working on. I'm trying to get larger percentages. That's kind of one of the things, because my stops anywhere from 10 to 20%. My wins are probably average about 6 to 7%. So I need to get 2 wins for every loss, maybe 3 wins for every loss just to break even. So I'm trying to stretch my runners a little bit more. And that's you can do that by buying more contracts, because you can sell one, sell a partial here and let the rest ride, or some type of strategy like that. Let's take a look at some of the paper trades I made, and I can't pull those up for you because they're on my other computer. But I think 2 losses, and the one loss was because I got in the trade and I got pulled in the meeting, so I sold it, and it was like a $5 loss. For all intents and purposes, it was a break-even trade. But I bought Roku at 9:48 this morning, paper trade, puts at 9:48. So I entered on this candle. Yeah, not the best entry, but it worked out. I paid $272 and I sold them at 10:02 for $298. So I entered right here and I sold them right towards almost the close of this candle. So yeah, I was down for a bit on them here, but in the end it worked out. I sold them here because I bought 2 contracts. Actually, I sold one of them here. I bought 2 contracts right here. I sold one at 10:02, which would have been roughly right here, and I sold the other one at 10:05, which would have been towards the end of this candle. So probably about right in this range. I sold it because we were getting close to this pivot point. So I paper traded puts here, and then when we got the bullish engulfing candle off the pivot, I traded calls here with real money. I paid $272. I sold one contract for $298 and the other contract for $310. That's a 304 average. 304 minus 272 divided by 272, 11.7%. The reason I entered this one, it wasn't the best entry. I probably should have waited for a pullback to about this area here, but I bought it because we broke below. I don't know if this was yesterday's or Friday's high or Friday's low, but we broke below it, and that's when I entered it, trying to play it down to here. Wasn't the best entry. Looking back, I should have waited till about a 50% retracement of this candle, which would have been probably right in this range, which would have gave me a lot better leverage. But it worked out. I also played Baba. Let's take a look at that. And I looked at these when I traded the Roku calls, but I didn't look at them just now. They were kind of meaningless this morning. That, for one, it was too early, too close to the open. There wasn't enough. There's only one candle on the hourly, and I think it was starting the second candle on the 15-minute. So there wasn't really much to go on with this. But so Baba, I bought puts at 10.51, and this was a loss. Bought puts right here. Yep, right at the low of that trend. So yeah, definitely not a good entry. I bought puts here at 2.53. I only bought one. I stopped out at 11 o'clock, which was the beginning of this candle. I stopped out at 2.26, so that was a loser. Traded Baba again. I bought calls this time at 11 o'clock. In fact, I sold these and instantly bought calls because of this big candle, and I was looking for a break above this. So I bought calls at 163. I bought two of them, and I sold one at 11.09, which was right at the beginning of this candle. I sold one. The second one I sold at 11.34. I sold the one for 182 and the other one for 183. So at 11.34, I sold this one right after this candle opened. I didn't like how we were getting higher wicks, longer wicks here. We were running out of steam. We had a doji candle here, and this candle started to pull back. It was actually down into the cloud when I sold it. But that one still worked out to, what is it, 19 cents, about 12%, 11-12% on that one. And then I got into Baba calls again at 12.18, which was right at the beginning of this candle. I got in because we had a bullish engulfing candle here, and we broke back above this average line. I bought them right at 12.18, but I was leaving for lunch because I had a meeting coming up. So I left for lunch, and it didn't move right away, so I sold it. Sold it at 12.25 for $1.40. $1.46. I paid $1.51. It was two contracts. It was a $10 loss, but sold it at 12.25. I bought it right here. Yeah, 12.18. Sold it at 12.25. So right after the open of this candle, I sold it. My stop probably, if I would have been able to sit and watch it, my stop probably would have been right here. Actually, I might have, probably would have been here. Stop, candle closed below this level. Probably would have been my stop. So would have had to close below this, which we didn't close below it. So if I would have held on, I could have made money on that one. It was a paper trade. I wouldn't have entered a real money trade at that time of day, knowing that I was getting ready to leave for lunch, knowing I wouldn't have been able to sit and ride it out. So I just wanted to see if it would work out for me. But that one would have too. So ultimately, in the end, would I have one real money win, one paper trade win, one paper trade loss. It's 1-1, 2-1, 2-2 on paper trades. But the last one, like I said, I really can't count that one. I'm just going to disregard it. So I was 2-1 on paper trades. My paper trade account, even counting that one that I stopped out at the end, is still up $47 for the day. So, and that 47 is not net. That's before fees. So I'm probably up, I don't know, $20 on that account today. But that's an experimental account. It's for stuff that I'm not confident enough in to trade real money. So let's take a look at SPY. I saw some nice stuff on SPY. Look at the SPY here. I had a bullish engulfing candle here. This would have been a good entry here because we broke above this support level, this resistance level, and we started breaking above the cloud. This would have been a good entry. Then we also had a bearish engulfing candle here. Entry would have been roughly right here. I probably would have waited for a pullback to closer to this level, and you could have rode this all the way down here. Then we had another bullish engulfing candle, so your entry would have been, if you would have waited patiently, even if you didn't wait patiently, your entry would have been here. It came over, you would have had a little bit of sweating to do here, but then you could have taken profits on this. Same with this one, another bullish engulfing here. So there were some nice setups on SPY today. Let's go back and look at the Roku, look at the other trades I made today, show you why I made some of those. I ran over them real quick as to what I did. I never really went into why I did it. Look at this Roku. Actually, no, it was Baba. So let's leave this up. I have the lines all drawn up on my other computer. If you take a look at Roku, I drew some trend lines right here. Pull up my drawings. Trend line from here down to about here, and just to kind of differentiate these. And then we also had across here trend line. So we had a bull flag forming. A bear flag forming. Bearish wedge, whatever you want to call it. But we had a bear flag forming. The problem, not the problem, but what happened is it came down and it held this one, which I kind of thought it would because we also had this moving average line coming up here to intersect it. So you have like a double set of support here, and then we popped out above this trend line, and that was at 1057, and I entered calls at 1051. So I got in these calls. I actually got in right off of this because I kind of expected it to bounce. I didn't know if it would break through on this bounce, but I was figuring I'd be ready. I wasn't going to let it go. I knew if it dropped below this, I was going to stop out. And actually what happened on my where's it at? On my puts, my stop out before that, I had a trend line drawn. At the time, I had a trend line drawn this way. So actually what happened was when it dropped below here, I went with puts. That's why I bought these puts when I did. The problem was when I bought them, as soon as I bought them, I looked and saw this level and thought, uh-oh, there's not a lot of room here for it to move. And it actually, when it got to about here, that's when I stopped out. In fact, my stop out was at right at 11 o'clock. It couldn't have been 11 o'clock. Yeah, it was. Right at 11 o'clock. I got in at 10:51. No, I'm looking at the wrong one. Okay. Let's see. No, that's right. I got in at 10:51. So I bought puts right here because of the break below this level. And as soon as I bought them, I realized, uh-oh, we got a level right here. And that probably wasn't the smartest entry. So I stopped out at 11 o'clock exactly, which was right here. And I instantly bought the calls. So I bought the calls because we broke above this. The problem was when I drew this trend line, it was a valid trend line. The problem was it broke down. It was so close to this level, plus the moving average line here. I just didn't see that when I first bought it. As soon as I bought it, I went, oh crap, there's not a lot of room to move here, and I really shouldn't have done that. So let's get rid of this line and forget this one exists, because it wasn't a very good line. It wasn't a very good trend line to break, because like I said, if you do break it, you break it on this candle at 150.09. You only had 20 cents for it to move before you hit support. So this wasn't a good entry, and I should have known better, but it happens. So if you take this bear flag, which usually fall below, bear flags will usually drop below. Now you could have also drawn one from here to here, but you really should have 3 points to create a trend line. But you could have drawn one from here to here, and it broke out above this. Either way, if you draw this one here or if you draw this one here, either one of those you use, either way you broke out above this trend line, and that was your entry for your calls. So that's why I did that. I'll leave that up there for now. The second time I go at the Baba was 12.18. Did I say why I bought those right about here? Yeah, because we had a bullish engulfing candle and we broke above this moving average line, so I entered right at the beginning of this candle. It would have worked out eventually. Probably wasn't the best thing to do because this was more of a spinning top candle, and I probably shouldn't have entered after I saw a spinning top. In the end, it would have worked out if I wouldn't have had to leave. I could have made money on that one. But those are my trades today. That's why I got into them, why I made them. Like I said, only one real money trade today. Made, I don't know, 11.5% or so. So I'm trying to cut back on the amount of trades I enter. That's trying to go more for, quality over quantity. Plus, like I said, I'm still really busy with my job, so I don't have time to sit and watch it all day. Trying to get one good trade, maybe 2 trades, and that's about it for the day. So, you see this trade I was in today. I was in it for 10 minutes. So, 10.5 minute trade. It's only $30, but I'll take $30 every day. I can live off of $30 a day. Not with housing and whatnot, but just spending money. Obviously, I don't pull it out to spend it. I leave it in my account, but I look at it that way. $30, that'll pay for my food for the day, pay for my gas for the day. That's kind of how I look at it. At the end of the month, you do that. You have about 20 trading days a month. That's $600 a month. For some people, that's a house payment, depending on where you live. It's definitely a car payment, a real nice car payment. So, yeah, don't get greedy. Don't go for home runs. Don't swing for the fences. Take your little base hits. Um, try to keep your winners bigger than your losers. Keep your stops somewhat tight and reasonable. And in the end, you'll make money. You grow your account. Let's just say you start out with $1,000 account and you make $30 a day. Average $30 a day. At the end of the month, you have $1,600. Now you take that $1,600 and you can maybe add one more contract. Now instead of 30 a day, you're making 60 a day average. Now at the end of the month, that's $1,200. Now at the end of the month, you have $2,800. Now maybe you bump it up to 3 contracts. Well, now you're making $1,800 a month. Next thing you know, at the end of the year, you have $15,000, $20,000 in your account that you started with $1,000 at. You can really compound this if you play it right. Don't get greedy. Don't swing for the fences. You see where I took my sells at. I sold the real money Roku trade. You see where I sold it at. Sure, I could have got greedy and held it longer. I sold it, what was it, right here? Somewhere around here. Actually, it might have been somewhere around here. I forget what time I sold it. 10:22. So I sold it at 10:22, right after this candle started. So I probably sold it right around here. Definitely not greedy. If I was greedy, I would have waited and see if it would have broke through this. A greedy person, when you only have one contract, a greedy person would have waited until to see if it broke through this. The problem is, if it wouldn't have broke through and pulled back, now you're saying, uh-oh, I didn't sell when I probably should have. As soon as it gets back here again, I'm going to sell. Well, what if it doesn't get back there again? Now, next thing you know, it's down here, and you're negative, you're losing money, and you keep saying, oh, come on, bounce, bounce. I just sell for, get that profit I could have had. And it never gets back to that level, and next thing you know, you're selling for a loss. If you're playing multiple contracts, you can do that. I wouldn't call it getting greedy, because it's more like playing smart. If you have multiple contracts and you sell the majority of them here, that's not getting greedy, that's playing smart. Let one contract ride. If it fails to break through, that's fine. Make sure you don't let it go red. Don't let that last contract go red, and you can't lose money on it then. So that's kind of my lecture for the day. And like I said, what I was looking at, things like this. These are kind of the perfect setups. They're sometimes harder to spot. And like I said, I even screwed it up today. And typically these bear wedges, bear flags, typically they'll break to the downside. But it broke out to the upside, and I jumped on it. I screwed up on the put side of it because I had a trend line going here. And really, you should have at least 3 points touching your trend line. It's a lot more valid, a lot more reliable. But as soon as you break above this, you jump in, and your stop out's going to be below this, a close below this. You jump in. Your target, my first target would have been, if I had multiple contracts, my first target would have been right here. Actually just below here, probably closer to here, because I want to sell before it hits that spot. And then my second target would have probably been right in here. Obviously this would have been the obvious target, second target, but to be conservative, I would have had it right here at the top of this, and we actually just hit that on this candle. So I probably could have got out right there, real close. But that's kind of how you play it. You play it smart. These lines here aren't from today. I just didn't take them off. So they're not valid lines. In fact, I'll pull them off now. They are lines from last week. I have the new lines, today's lines, drawn on my other computer. And actually, I had a line at what is that, 151.39. So I had a line drawn right here, 51.39. Right, let's call it right there. Oh, wrong drawing tool. 151.39. So I had a line drawn there. I had another one at one. Let me see what it is. I can't. 151.02. I had one drawn at 151.02. Right here. I had another one drawn 149.98. Let's call it 150. I had one drawn there, and then I had another one down lower that we actually haven't hit yet. We did hit it right at the open, but since then we haven't hit it. It was down about here, actually right about where that yellow line is, which was today's open. So that's why that line was there. So you see, we came right up to this line, and right where I said that that you should have played it. However, I actually would have played it right here at this one. The high on this candle was 151.33, and this one was 151.34. But and you see this line here was actually respected right here and right here. So that's kind of how my chart looked on my other computer. And where'd they go now? I had my trend lines. I must have deleted my trend lines. You know what I did? I cleared all drawings over here and I took these off. That's why. So I had a trend line here. Go back and change the drawing tools. So trend line from here to here, and also from here to about here. So that was those were my lines. So a break out of that either way would have been the play. If it would have broke the downside. And this was actually, this line here is the right one. Let's move it. It was actually off of these candles here. That's where that was. So it was off of these candles. So yeah, we had 1 point. That's 2 points. That's close enough to consider a point, plus a few here. We had 2 points touching here. But the better line to play would have been this one here. So yeah, I tried playing this breakdown here, but not realizing how close this was, not paying attention. I kind of got caught in that one. If I would have been paying better attention, that would have worked out. I wouldn't have entered that. I probably would have waited till it broke below this, then would have entered, and it didn't break below that. But this line here broke above this trend line. That was the play. So that's it for today. On my real money trades, I think I have 4 wins in a row now. Only trading 1 trade a day. I had a loser last Tuesday, and then Wednesday, Thursday, Friday, and today had 1 winner each day. So hopefully I can keep that streak going. They were all, I think, all around 10% winners. So hopefully I can keep that streak going and keep making winning videos every day. So thanks for watching, and maybe I'll see you tomorrow. Maybe I'll try to make another video tomorrow. I don't know if I'll do any trading tomorrow. Tomorrow's a pretty busy day for me for work. Might not even look at charts tomorrow, so we'll see how it goes. But thanks for watching, and see you later. Bye.